What we're going to be talking about today is building out your accounting team as your business grows. We've talked about this in the newsletter. We've talked about this on our podcast before, but we're going to give some clear metrics today on what this looks like as your team continues to grow. Usually when businesses are small, under 3 to 5 million, they have just a bookkeeper or an office administrator, maybe an outsourced bookkeeper, something like that puts all of their stuff together and presents them some type of package, helps them pay bills, helps them deposit money into the bank account. And that works for a while. But as the business grows and sophistication becomes necessary through reporting or projections or budget, the needs change. Here's a couple of the key hires that you're going to need inside your business as you grow above 5, 10, 15, $20 million of revenue. The first one is a controller. Controller is the head of your accounting department. Most companies under $50 million don't need a CFO. They just need a good controller. So a good controller is responsible for clean books, timely closes, accurate projections, and budgeting, and also managing the other people on the team. Ideally, as early in your company's growth trajectory as possible, you bring on a strong controller. Now, most businesses are hesitant to do this because the compensation package is large for a controller, often making as much, if not more, than the owner at that time of their business. But it's a vital role to get right, and it will hold you back later. So they lead the accounting team, and they're essentially fully responsible for the goings-ons daily inside your accounting department. The next one is the Accounts Receivable Clerk. So accounts receivable is what it is. It is what it sounds like. You did work, you sent an invoice, and someone owes you some money. The role of the Accounts Receivable Clerk is to call on those accounts, make sure that if there's at-risk accounts, we're dealing with them appropriately, we're consistently communicating, we're sending some to collections, and we're also updating their terms. So do they have a credit line? Do they have 30 days of payment? And depositing checks. So the way we think about AR is pretty simple. It's money in or money that's owed. Ideally, your AR clerk is different from the next position, which is your AP clerk. So a lot of companies, due to budget or due to size, they tend to combine this position, but it's a huge point of failure for businesses because you're giving one person control of both money in and money out, and that's a pretty big problem. Very easy to create fraud in that type of situation. So accounts payable is money that you owe vendors. So you receive an invoice and you have to put it in the queue to pay. So the accounts payable clerk, their job is to receive those invoices, fact check it against the PO or whatever purchasing system you're using. They're going to job cost it if it's for COGS, and they're going to basically make sure that you actually bought and received that thing. And then they're going to time that payment and communicate with the vendor what the timing of that payment is. It's a big, important job. And the way we think about that is they are our front line to our vendors. So vendors are obviously an important part of our business. We can't do our job without vendors selling us supplies and selling us equipment. And an accounts payable clerk and how they communicate and how effectively they communicate is a big part of making a good working relationship with the vendor. It's, we owe them money. So we like to think of them as our liaison with vendors, and that's a big important part of their role. The final role inside accounting is the payroll clerk. So this is depending on your business. Most companies seem to need one around 80 to 100 employees, where payroll is either a full-time job or most of a full-time job. So a payroll clerk is what it sounds like. They're going to be truing up payroll every day. They're going to be assembling hours. They're going to be assembling commissions or whatever other incentive pay styles you're using. And they're going to be queuing that up for the controller to process payroll. This takes a very detail-oriented person who can take some frustration if there's a mistake, but you want someone who's going to be fanatically focused on getting the details right, because payroll is not something you want to make a mistake with. So those are the 4 key hires inside an accounting department as your business grows. So that's what our team currently looks like. And really that team starts to get built out somewhat robustly around $10 million of revenue. You bring on your controller, you bring on your AP clerk, maybe the controller does AR at that time. As you move into the 15s and 20s, you start adding the the AR clerk, and the timekeeper. And that's how an accounting department works.